Hey, everybody. Good morning. Welcome to the webinar. Appreciate you joining us here this morning. Thanks, Eliana, for getting everything taken care of, as always. Great job there. Going to spend the next 20, 25 minutes or so talking about the new big three in the long-term care marketplace and why this move to diversify is so beneficial to the market overall. A couple reminders, those of you that are on our webinars routinely, this won't be a surprise, but we've got everybody in lecture mode. That's mostly so that we can get a good quality recording, which enables you to circle back to the recording. We're going to do a switch here on some of the technical stuff here. There we go. Okay. Anyway, so we're going to do that to get a good quality recording. We'll get that posted, get it on the webinar or the website here later today. And also, we will be doing follow-up calls, as we always do, with a significant emphasis on getting the contracting that's necessary taken care of so that we can enable you to move forward and start helping your clients. So what we're going to talk about here, so spend some time, and as you know, if you've been on my webinars in the past, I don't tend to focus specifically on the content of a particular bullet point so much talking around it. Okay, so is and is not. All right, what we're doing here isn't necessarily going to be about selling insurance. It's more about an offer to help. The nice part is we are in the middle of a trip kind of back to the future where we have multiple different carriers in the market on the individual side as well as on the hybrid side. That's a bit of a different situation because frankly, for the most part, up until the early part of 2020, the brokerage market had been Mutual of Omaha, which is great. It's a great carrier. And obviously we have great appreciation for what Mutual brings to the market, but the availability of some of the things that we're going to talk about today with regard to payment options and things like that are important. Red shoes, blue shoes. Had an agent that I worked with in California for a long, long time named Jack Reagan. And one of the things Jack said to me early on in our working relationship that resonated was that if the client wanted to buy red shoes, he wasn't going to spend a lot of time trying to talk to him about blue shoes. Well, fortunately now we can work within that framework. And for a long time, we couldn't work within that framework because we didn't have the ability to do anything but blue shoes. And yet we had clients who wanted to talk about red shoes. And we'll talk more about this next thing. The problem is still the same. It's been that way for a long, long time. We got 90% of the people that are in your book of business and that you are at your golf club or your tennis club, your church, wherever you are, the people that live on your block, all these different subsets of your life. Okay, these people haven't had a conversation about taking the steps to protect their retirement plan. So are you going to be the first? So in other words, and this is kind of the culmination of everything, are you going to be part of the solution? You're going to be part of the problem. Right now, we're all, to a large degree, part of the problem. Frankly, some more than others. But all you've got to do to start being part of the solution is pick up the phone and start offering to help them. Okay? And again, this is not about selling insurance. The insurance becomes a plug-and-play solution for the clients. The opportunity is offering to help them protect that retirement plan. And you got to remember, if something changes unexpectedly next week, the retirement plan is where they're going to go to pay for it, period. Because there are not a lot of people out there that have $200,000 sitting in a savings account plus $200,000, $300,000, $400,000 in a retirement plan. That's where the money is, okay? But the good part is now you've got a lot more options, and these are options the clients want. And part of a sub part of the conversation now is you positioning them to avoid being in a nursing home, all right? And if people have paid even the smallest amount of attention to what's going on in the world out there, they know they don't want to be in a nursing home, which means they've got to do something other than liquidate their assets and sit back and wait to go on Medicaid. And you can make that opportunity available to them. So, um, it sounds a little bit capitalistic, excuse the duplication there, to talk about being positioned to capitalize. But the reality is everybody knows about it now. Not a great secret. What is it that you're going to do to keep your clients from having to deal with this pandemic hotbed concept? This is a 6-month-old article, but if you're reading at all out there in the world, you know that the same situation that Anne Marie was talking about here still exists. It's still going on all the time. Okay, well, you can help these folks. You can help them avoid going on to Medicaid by putting a revenue stream in place. Okay, all part of an offer to help rather than trying to sell them a product or lead with a product. So it's worth noting, because we're not going to spend much time looking at it today, but the success and the volume in the hybrid market tells us something about the traditional market. So stop and think about it for a second. It tells us that even though so many people have run away from this or want to run away and don't even want to have a conversation about traditional long-term care, there's still a big appetite for it, because the hybrid market, up until last summer when there were some changes, has been going and blowing, absolutely going and blowing, because people are grabbing the hybrids, and they're grabbing the hybrids because they have an issue, some heartburn about use it or lose it. And the hybrid market makes that go away. Okay, they've got an issue with regard to premium guarantees, rate increases, etc. The hybrid market can make that go away. But the real thing to focus on with regard to what the hybrid market is telling us is that people understand that they need to address this retirement planning protection idea. Okay, and they understand it for a lot of different reasons. The question is whether you're going to wade into that conversation and begin to offer to help people with that. All right, so let's take a look at the first of our big three, National Guardian Life, A-plus carrier. They've been big in the life insurance business for a long time. Jim Glickman, who's a big name in the long-term care business, convinced them to come into the traditional market and come back in and offer some things that at the time that they started this conversation, nobody else had in that traditional space, and that includes the single pay and 10 pay options. Those are really popular with business owners now, because business owners working with agents who are being open-minded to their situation and the conversation, they realize that they can use their business to pay for the biggest chunk, if not all, of their long-term care. And they can do it in such a way that by virtue of the 10 pay or even the single pay, they can get it done before they retire and have it off their table. Okay. NGL also brought lifetime benefits back in the game. There was a period of time 15 years or so ago, 20 years or so, where there were several carriers that made lifetime benefits available. That had largely gone away until NGL came back in about 3 years ago. And they also have brought the shared care opportunity with a third pool of money. So in other words, you got Bob and Carol Davis, and if you've been around me much, you know those are always the hypothetical clients, and they want shared care. Okay, but they don't want to be in the situation where Carol pays for long-term care for 25 years and then finds out she's only got 1 year of benefits left because Bob used it up vis-a-vis the shared care option. NGL makes a third pool of money available. That can be significant for folks that are in tune with shared care and what it means. Okay, so great innovation there, great way to address the red shoes issue. And they do also have joint pricing. Get into a lot of complex issues here, not the kind of thing we're going to get into with regard to questions and such at the end of this presentation. Okay, but it is something that we will be glad to spend some time with you talking about on an individual basis here when we do the follow-up calls. And then the last piece of this, it is worth noting that one of the downsides with NGL is they have a lower daily max option than what you typically have here. They cap out at $300 a day, so that is a little bit lower. But a lot of folks are comfortable with that because they're more interested in the lifetime benefits or the single pay, those kinds of things. Okay, so a little bit of a trade-off there, but good to have somebody that brings these different options in. Mutual of Omaha. Mutual's been the stalwart in the traditional space for a long time, thanks in large part to the fact that the carrier brings multiple ways to solve the inflation dilemma to the table. Okay, they do have the quarter point increments starting at 1, running all the way up to 5, and they do offer the buy-up option, which is a guarantee until the clients have reached the age of 75. That means this is the only product in the market that makes it possible for your clients to buy more inflation, to get more benefit after the initial underwriting and acceptance period. Okay, so they got a couple of kids in college, maybe they're anticipating daughters getting married and the costs that come with that. They can start at 2.5% or 2%, a price point where affordability lives for them, and then down the road they know they're going to have another opportunity to make a decision. Okay, and that opportunity is guaranteed, and it's guaranteed without any kind of underwriting. A very unique opportunity there. Okay. Again, a typo here, got to own that. It's supposed to say cash benefit, not case benefit. All right. But this cash benefit is immensely popular at claim time. It's not the kind of thing that you can really explain and document thoroughly because they're not in the fire at the time that you're doing the initial sales conversation. But the ability to get 25% of the monthly max in cash and handle things the way that the family wants to handle things. We know from experience, from claims experience with many of our accounts, that will be very, very popular when you get to claim time, but claim time is going to be a few years down the road. All right. Also worth noting, the underwriting relationship with Mutual of Omaha is the easiest to manage in the industry. Okay. Mutual created this ARI, the Authorization to Release Information form. That enables, with a signature from the client, it enables Mutual to spend time on the phone with you, with us, and help us position the clients to where we can advocate for them and perhaps maneuver around a mild hiccup that we've run into with underwriting. But doing this keeps us from having to run into a blockade with HIPAA that creates problems, frankly, with the other carriers, makes it very, very difficult to solve problems after you've reached a certain point in the underwriting process. It's also worth noting that the security benefit that the Mutual product has is a really unique way to manage split decline. For a long time, we had to deal with this idea that when Bob and Carol found out that Carol couldn't get long-term care because of something in the medical records that they didn't anticipate or perhaps weren't forthright about, you got the folded arms and we're not going to take this if she can't get it. All right? Well, the security benefit offers you as an agent a unique way to manage split decline by putting that non-underwritten rider on Bob's policy to make benefits available for Carol. Again, this is the kind of thing that we could talk to you about offline if you have a specific case. Let's not get into a lot of hypotheticals because hypotheticals don't matter. But what really matters is the ability to manage when we get into the underwriting process. The third carrier in our group here today is Thrivent. Thrivent has been a giant in the affinity market for a number of years. Once upon a time, it was known as Aid Association for Lutherans, always kind of been tied to the Lutheran group and done fabulously well in that space. And they made the decision a couple of years ago that they were going to get more into the brokerage market, and they got themselves out there. All right, they do offer an additional way to do 10-pay financing for this. which for business owners is fabulously popular. It's another carrier that has the cash benefit built into it. And again, that's popular. One of the real interesting things that does from time to time pique people's interest is this idea of the higher monthly benefit going all the way up to $15,000 a month in starting monthly benefit. Okay, if you've got somebody that's got a concern because they're in an area, maybe California where it's super expensive, they can address that. Alaska is another place where very, very expensive. That can be addressed. Okay, it is worth noting that part of the affinity piece with Thrivent is that going forward with the application does require an attestation of Christian faith. That is objectionable to some folks, but it's kind of a game day decision going forward. Agents are, able to explain that to the clients in such a way as to minimize concerns that they might have. But the biggest thing is this brings a third A-rated carrier into that brokerage space, and that brokerage space was a one-horse race for a long, long period of time. So that kind of culminates our overview here. Some takeaways as we get ready to wrap up with questions and such. As I noted before, contracting. We will be talking to you about contracting. You don't want to wait. It creates compliance problems when you do wait, and the days when you could do paperwork for contracting and an application simultaneously are largely gone because we're in an environment where people aren't meeting face to face. Significant emphasis being put on electronic applications, which we can help you with. So you want to take care of that, and we will work with you on that. So question is are you going to be, and this goes back to what I talked about at the very beginning, are you going to be the first person to reach out to the Bob and Carol Davis in your neighborhood or at your church? Are you going to be the first person to reach out to them and offer to help them with this key part of protecting their retirement plan? Okay, because if you are, it will be a humbling experience for them. I can guarantee you it'll be a humbling experience for you to take that step and take that off the table in terms of a concern that they may not even really be aware of, and it'll start you towards addressing this idea of the 90% solution. Okay, 9 out of 10 people in your orbit, regardless of the different component parts of your orbit, haven't had this conversation. If you want to change the revenue projections for your practice for the remainder of 2021 and have a significant impact on clients, this is the way to do this. But it starts with something as simple as just picking up the phone and asking them if you can come over and talk to them about protecting their retirement plan. No more or less complicated than that. Okay, we're going to go ahead and wrap everything up here. Super appreciate folks making your time available. Eliana will get this processed and posted up on our website. We will be doing the follow-up calls as we noted before. Thanks, everybody.